Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my low time frame bearish scenario where we're looking for an ABC zigzag, a 535 to the downside, where wave B is finished in a very nice WXY. Wave W being an expanding flat, wave X can be any corrective structure, and wave Y being a zigzag, where the most common target for wave Y was between the 1 and the 1.236, taken from the low to the high of W to the low of wave X, which was very nicely respected indeed. We had some additional confluence as well and heavy bearish CVD divergences at the highs for then a push towards the downside. In this scenario, for a wave C, you want to see impulsive structures moving towards the downside, and also this scenario is invalidated the moment price would move to the upside and take this high. If we go to the low time frame bullish scenario, then the low is in and we are looking for impulsive structures to the upside. Now this is then a wave 1 followed by a wave 2, and this has to be a second wave 1 to the upside. The problem with this scenario, as identified yesterday, is that this second wave 1 has to be a leading diagonal. Now that by itself is not a problem, but the fact that it is going to be much longer in time and also bigger in price compared to the first wave 1 is something you don't like to see, as the second wave 1 over here in a double 1-2-1-2 is a lower degree wave 1, and therefore you like to see it being shorter in price as well as in time, which is not the case, lowering the probabilities. But also you can see now that the invalidation line has been hit, because in this scenario this move to the upside over here, this second wave 1, was a three-way structure in an ABC, a nice zigzag to the upside. However, if we are looking for impulsive structures to the upside, the only thing that you can count impulsively if you see a zigzag to the upside is a leading diagonal, meaning that wave 2 also has to be a zigzag to the downside in then an ABC. But the fact that now price over here took the low of wave 2, and then this being a zigzag structure, you now actually wanted to see another zigzag to the upside, but this invalidates a leading diagonal, and therefore it's not looking very good for the bullish scenario. Now if we zoom out again, then the volume profiles of the range are seen over here. So we have a bigger volume profile from the range here on the left, and the smaller volume profile of this range over here. You can see we're actually in between the two volume profiles for quite a while already. This is the value area high of the bigger volume profile, which acted as support so far, as you can see, and this is the value area low of the smaller volume profile, acting as resistance twice now, once and twice over here. Now if price is moving towards the downside, testing this value area high again, as you probably know, the more often you're going to test resistance or support, the weaker it becomes. And if price would move to the downside, reach this level and moves towards the downside inside this volume profile range, the next target is going to be the point of control at 27.9k, and then the low of the range at 26.2k. And at the low of the range we also have additional support, which is sitting between 26.2k and 26.5k, but first it has to pass this bigger support area, which is sitting between 26.8k and 27.4k. Now if we look more locally, we also have additionally a support resistance flip, keeping things very simple. Over here, support turning into resistance. Now for a very short period of time we were above resistance, or as you can see, like price pushed to the upside, potential backtest over here for again a move to the upside. However, after retesting over here the white box, the support resistance flip, and moving up, price was never able to take this high. That's a red sign, and now it moved below the support resistance flip over here. One can argue it retested it already. Also even more locally, I put this on my chart yesterday, where we have now this support resistance flip as well locally, where you have now price over here found resistance, moving up, support, moving up, and then bam, go through it, down again, resistance, resistance, maybe again, or we just continue to the downside if we think about support resistance flips. Now if we look to the lower time frames, then over here we have an impulsive structure to the downside, which is finished. So a 5-wave move to the downside, the beginning of a bigger wave C. In this scenario, we then have an impulsive wave 1, a wave 2, impulsive wave 3, sideways corrective wave 4, and an impulsive wave 5 to the downside, where this is then in completion a green wave 1, you now expect a corrective wave 2 for then a 3 to the downside. Most common targets for a wave 2 are between the 0.5 and the 0.786 fib, which is between 29.7k and 29.9k, with the 3A2 being a minimum target most commonly, which is sitting at 29.6k, and the 3A2 is a rare target. These are common, and the 886 also being a rare target. Now what is interesting, however, is that this wave 5 did not reach any of the wave 5 target areas. So most common target area for wave 5 is between the 1.236 and the 1.618, taken from the low of 3 to the high of 4, but as you can see, this low did not reach that far. Another way to calculate a wave 5 target is to take the 1-to-1 of the high of wave 1 to the low of wave 1 and then put it on the high of wave 4, which is this horizontal line over here, but as you can see, it's also not been reached, and you can have the 0.618 taken from the high of 1, low of 3 to the high of wave 4, which also has not yet been reached. So that's quite interesting and lowers actually the probabilities of this being a 1, 2, 3, 4, 5 to the downside, because it didn't reach this far. But the minimum requirement for a wave 5 is that it goes below the low of wave 3. And actually it's not completely true, because you also have truncated wave 5s where you have a 1, 2, 3, 4 and then a wave 5 that is not taking the low of wave 3, but that is incredibly uncommon and therefore something we never look for. But then again, we don't have to think about that, because this low actually took the low of wave 3 and could then potentially be the low of a wave 5, after which we then look for a move to the upside in a wave 2. The other bearish scenario on the micro is that we are looking for a triple 1-2 scenario. In this scenario, we then have a green 1-2 looking for a bigger green wave 3 to the downside. In this green wave 3, we then have the blue count and then again a 1, 2, bigger 3, 4, 5 to finish the green 3 for then another green 4, 5. And inside the green or the blue 3, we have a white count being 1, 2, 3, 4, 5. When the white count is finished, we finish blue 3 and then eventually blue 4, 5 to finish green 3, 4, 5 to finish eventually the whole green count to the downside. Now in this scenario, you can see that this wave 2 could potentially already be finished or another high to be made, because a minimum target for wave 2 is the 3A2. It's a bit more rare, but still a target nonetheless. Most commonly, again, 0.5 to the 786, sitting between 29.5k and 29.6k, taken from the high to the low of this wave 1, where if we look at the Fibonacci targets, the first wave 2 retraced to the 786, the second wave 2 over here retraced to the 3A2, almost hit the 0.5 but just missed out, and then this potential third wave 2 at least now retracing to the 3A2. Maybe can it go up to the 0.5? That's the question, or the golden pocket. We don't know yet, of course. But you do see a channel on my chart, and what's interesting with the channel is that usually a potential triple 1-2 has a little bit of a like contracting diagonal type of move, where you then have a 1, 2, 1, 2, 1 and then eventually a 2 before then a move to the downside, creating a contracting diagonal type of form. That's most common, where you then have this being a 1, 2, 1, 2, 1, 2 move to the downside, and the upper trend line over here is basically the almost like invalidation of a contracting diagonal, because if you take the low over here, the two wave 1s, then what you want to see is of course the wave 2s being contracting compared to the upper trend line of the channel, because the moment the channel is hit, we have to think about a channel or something else compared to a contracting diagonal. So as long as I can pull this trend line away from the upper side of the channel, we are still in a contracting price action, contracting diagonal. The moment the channel is hit, it's not contracting anymore, but it can still be a 1-2-1-2, a triple 1-2, I should say, but it's just not a contracting diagonal anymore, which is most common, right? So that's something we keep in mind. Now, if we look at the CVD divergences here, Then the CVD divergences are predominantly bearish, as you can see, many red lines on the chart. Now, all the bearish CVD divergences that you see on the left side have already played out. So we initially had bearish CVD divergences here, by the way. Then we had additional bearish CVD here. This high made during the news, also bearish CVD divergences with the actual high, and the target was this low. Now, this target has been taken as price moved over here below this low, so that all played out. More locally now, we still have bearish CVD divergences over here, lower high on price, higher high on the CVD. That is a bearish CVD divergence. And if we look at the lows, we actually have bullish CVD divergence, higher low in price, lower low on the CVD. Now this low over here, wick below the double bottom that price created, low 1, low 2, so that is quite nice. With the retracement, however, what you can see is if this is a first structure to the downside, a second, and you expect upside, the fact that the 886 has been hit means that the probabilities are higher for this to now be a wave B to the downside or a wave X compared to a wave 2, because as explained, the 886 is a very rare target for a wave 2 and is more commonly hit for a wave B or a wave X. So if price would move to the upside, the probabilities are higher. It is part of a bigger corrective structure and not a new impulsive structure to the upside for new highs. If we look at the news, then we do have news today at 2:30 p.m. Central East European time, so make sure you trade safe around these hours. And the probabilities, well, if we go and zoom out, then on the medium time frame, the probabilities are bearish, looking for a wave C to the downside, or at least new lows to be made going below this target over here, where we do have interesting target areas around 27k, 26k as well. Of course, around 28k, we do at least have that point of control that we have to keep in mind over here, so make sure to put that one on your chart if you want. On the low time frame, currently the probabilities are also towards the bearish side, meaning that the high is in and we can be looking for continuation to the downside, in this being a wave Y. An ABC is now also invalidated, in this being then a wave A, B, and an impulsive C. Because of what I explained with the diagonal, we could have had a potential ending diagonal in a C, but that's also now invalidated on the lower time frames. And in a wave Y, you prefer a simple structure like a zigzag that we have now. If price moves up again, then in this wave Y, you're going to have a WXY scenario, which is not preferred in a bigger wave Y. So therefore, preferably, this is the high. And on the micro, it could be quite nice to maybe move towards the upside. Reason being that currently price hit the 0.382, which is a rare target for a wave 2, and not a common target. And we also have a target box above price over here. As you can see, some additional resistance, which is sitting between 29.5k and 29.6k. So that could be nice to hit for then a move to the downside. It does mean we're going to hit the upper side of the channel. So it's a little bit of a question mark in general, right? We are looking for downside. So if price is just going to do this, I'm absolutely fine with that. I have no problem with that at all. But it's just that, yeah, we hit the 382. It's a target, but we have a target box here. The problem is the channel. So we will see. Like actually on the micro, I guess we could be neutral in some way. We do have bullish CVD. We also have bearish CVD. So that's countering one another. We have the 382, which is a target, but it's not a common target. You know what I mean? But in the end, we are looking for moves towards the downside and therefore not towards the upside. Now then finally, I was at the premiere yesterday of the movie Gran Turismo, as I was asked to be an interviewer on the red carpet, and that is then also what I did. So over here, this was in the cinemas, give you a little bit of insight in what I did yesterday and the reason I couldn't make a video, and I put everything on my Instagram, where I was over here in a cinema in Utrecht. They had many racing setups here for people to play as well, which was amazing, and obviously I played some laps. Here I'm standing with the mic, people racing. Here I'm chatting to some friends of mine, and this was the area where I did the interviews with people. And of course, famous people in the Netherlands are coming here, and influencers and all that stuff. And I know many of them as well, as I'm part of the gaming industry for such a long time, 17 years now. So it's like I grew up with that industry. I have my own business in that industry. So then we were watching the movie, and this is funny. This happened. believe me, I'm looking at the cinema movie screen, and right at the climax of the movie, the whole screen movie shut off. No lights, no nothing. So we were sitting in a cinema without any lights. This is a movie of the room, like a live shot. As you can see, you can't see shit. It's all dark, it's all black. Nothing happened. Literally on the climax, we thought it was part of the movie, but then after 3 seconds, the sound continued, but the screen was off. Yeah, and this is the room. People already walked away a little bit, and here I was still playing some games. So yeah, you know where I was last night. I'd like to thank you for watching this video. Hopefully it was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.